Could mortgage rates finally get back into the fives? Hey, everybody. My name is CJ Carr with Investment Property Builders. We're a real estate investment company that also builds property. We hold 71 doors worth about $16 million. Most of those properties we built ourselves. So we are super excited about the prospect of getting some lower rates. It has been an interesting couple of weeks for mortgage rates. Last week, we got some really weak jobs data and interest rates came down. The 30-year mortgage came down to about 6.3. Then on Tuesday, we had a huge jobs revision, 911,000 jobs revised to the downside, just a massive revision reinforcing how weak the job market is. And mortgage rates actually the same, maybe even ticked up a little bit on that news. So the market was completely expecting that. But then we got the wholesale inflation data, which came in softer than expected. Then we got the consumer inflation data, which came in a bit hot, but it was as expected. But we also got a tick up in jobless claims, further supporting the fact that the job market is absolutely weakening. And it looks like the Fed is going to prioritize jobs over inflation. It's also thought that the inflation we're experiencing right now from the tariffs should be transitory. Next week, it's widely expected that the Fed is going to cut rates, pretty much close to 100% chance of that. So what's not known is whether that's going to be a quarter point, or are we going to get more of a jumbo cut like we got last September after we got a really big jobs revision to the downside? So we'll have to wait and find out. The other thing that is also expected by the market is that we are going to be getting cuts at each of the next few meetings, which is just going to be really good for real estate. In fact, there's already been a tick up in properties going under contract, in refinances. So there's a lot of people on the sidelines that have been waiting for this to happen, that are ready to jump in. A lot of real estate investors that have properties that are at higher interest rates that would love the opportunity to refinance those. We do have some properties as well that we'd love to refinance. It's just a matter of maybe if you wait 6 months, you'll get a much better rate than you would if you refinanced here pretty soon. It is going to be very exciting to see some lower interest rates, and just the prospect of getting back into the fives is just huge. There's a potential that we have seen the bottom, that maybe last month, this is probably the bottom of the market. And for real estate, I don't know if it's going to explode. It just depends on how high unemployment gets and also how low interest rates get. It is possible that by next spring, if rates come down enough, that we could have a very hot market. So it could be a really good opportunity to get out there and just find out what deals are still on the table, because they're going to probably disappear pretty fast. We recently have been able to grab a couple of properties, some vacant lands for some really good prices that could change pretty quick. That's something to keep an eye on. With that being said, next week is a huge week. We'll find out what kind of rate cut we get, and we'll also find out how much that impacts the mortgage rate. Because if you remember last year, rates actually started going up after the jumbo cut. But I think this time mortgage rates will go down, especially with the labor market softening. Let me know what you think in the comments, and I'll catch you in the next one.